I'm Greg Bonnell. Welcome to TD Active Trader Live, brought to you by TD Direct Investing. This is your educational one-stop shop for in-depth market analysis, investment insights to help boost your trading potential. Coming up, with the holiday shopping season beginning to ramp up, the consumer discretionary sector is in the spotlight. Plus, our trader debaters standing by. They got the bull and bear case for Enbridge. Also going to take a closer look at Intel's share price, been chopped in half this year. That's all ahead. You're watching TD Active Trader Live. All right, let's check in on the markets. U.S. equities, a bit of a pause today. They started the month of December. Of course, yesterday was the first trading day of the month, first trading day of the last month of the year. Wrap all that into your head at record highs. We're getting a bit of a pullback today. Let's take a look at the heat map to begin. You can see we're getting some modest bids for some of the biggest tech names. Obviously, the Magnificent Seven in terms of usage for driving the market has calmed down this year. We've seen more breadth in the market, but still, they're powerful players. You got an Apple, an Nvidia, a Google, a Meta, all up pretty modestly at this hour. Tesla, though, down about 1%. Let's take a look at the S&P 500. As we said, another record close to start the month of December. To start things off today, we're a little bit underwater, but we're starting to come off the lows of the session. There's nothing too dramatic right now. Of course, we got some data coming later in the week, including on Friday. We're going to get the jobs report, and then you get the Fed later this month making the last rate decision of 2024. That labor market indicator, that read's going to be pretty important to what they're going to think about all that. Now let's get some name specifics here. United States Steel Corporation, U.S. Steel. More colloquially, we can see in the pre-market action a steep drop off from yesterday's close and weakness into the open. What are we getting here? This is President-elect Donald Trump. It's not the first time he said this. He's again pledging to block Japanese company Nippon Steel and their planned purchase of U.S. Steel. He said it on the campaign trail. This is the first time he said it since winning the election. He says he's totally against the once great and powerful U.S. Steel being bought by a foreign company. He vows that as President of the United States, which comes next year, he will block the deal from happening. So we can see, even though he's still just President-elect right now, he talks about the policy and there's real-world implications, including for U.S. Steel. Also want to take a look at the New York listed shares of Bank of Nova Scotia. This is the first of our big Bay Street banks to report quarterly earnings. You can see the pre-market action. There was a drop off from yesterday's close. We're still to the downside compared to yesterday. So what happened here? They did report higher fourth quarter profit, but they missed analyst estimates. So here's the good. Boosted revenue, set aside fewer provisions for loans that could go sour. Usually good for a bank, but there's impairment charges in this quarter related to their investment in a Chinese-based bank and also some higher than expected tax rates. So in the end, the market takes a look at it and says it's a miss on the bottom line. And that's your market update. All right, joining us now for more technical take on the markets, what's driving all this action. Kieran Amin and Jason Nadek from our direct investing team. Great to have you guys back in the chairs.
Great to be back again, Greg.
All right, so we just did a little blow-by-blow of what's happening in the market right now. You are always taking a closer look at things underneath the surface for that technical take here. You're going to show us the U.S. buck to start.
We are, yes. So DXY, the US dollar index, is what we're going to start looking at. One thing just to notice here, we've got if we pull up the chart, we've got this descending triangle pattern that's formed over kind of along, it started back in 2023 and it's just making lower highs, and the lows have been kind of fairly sort of steady there. But just recently broke out of this triangle pattern, which is a bullish signal, bullish indicator, and it's testing this key support that was there previously, and it's getting into those zones now. Now, what this usually means for folks is when the US dollar strengthens, the greenback is against its 6 major pair currencies strengthening. It can be good for the economy because it could mean lower oil prices and commodities, which is disinflationary. But on the other hand, it also means that exports are going to be more expensive for foreign buyers, which can then hurt corporate profits in turn. The other thing that's noteworthy to look at this is just over the weekend, of course, the incoming administration had put new threats to say 100% threats against the BRICS nations. And these are
where We're the world reserve currency, not you guys.
Not exactly. That's pretty much what the threat came down to. So whether you are either going to create or back any other currency besides the greenback, you're going to face 100% threats, and they'll close off the U.S. economy against those. So countries like notable ones are Brazil, Russia, China, and India, probably the biggest ones they're impacted by this. So that's what we were looking at there, and we'll see how it holds up against it. The next thing that we thought was that was interesting is, we're going back to with interest rates cutting down, it's kind of blowing up the small caps, but the one forgotten child is the middle child, and this is the S&P 400, the mid caps. So we're going to take a look at that. They're getting a bit of love as well, with a little bit of a rotation coming through. So we see an ascending triangle pattern form over here. In fact, right over here we had a double bottom, and it broke through that as well recently, and is trading above both of those 21 and 50-day moving averages as well. Now the measured move, just based on the double bottom over here, is really looking like it can test out that we can go up to that 3,400 level and see if it holds there. So that'll be a key one to look at. And one other thing that I've noted just in my research was, I was looking at the forward multiples, the forward PE ratio multiples, and typically on the large caps it's about 22x as a whole on the S&P 500, and the S&P 400 it's about 17x. So from a value proposition, it's attractive as well, so that's where we're seeing money flow come into it. And also from just a return on equity, it's right on par with the large caps as well. So something to keep an eye on over the coming weeks there. The final one that I will take a look at is going into this cycle that we just came out of, which is the retail consumer discretionary there. We've seen, again, this is all in the backs of interest rates. People are going out and spending some of those big purchase items now. Again, that's what the consumer
maybe they got a deal over the weekend.
Maybe they did. Black Friday finished, there, right? Cyber Monday just wrapped up. So they've recorded the highest gain in November, this sector. Out of all the sectors, 13% is what they recorded out of the S&P 500, followed closely by financials, which is at 10% there. But they've broken out of their key resistance area, and this is dating back, like they pushed back this, pre-pandemic area, 2022 sort of. So this is a key push that they're going towards out of this channel as well. So very bullish rotation we're seeing again in this space as well.
I went on one of those big e-commerce platforms over the Black Friday weekend, and I really splurged about some soap. I think it was a discount. I need some soap. What are you going to do? What are you going to do, right? You need some soap. Jason, you are taking a look at another stock that is in the headlines this week, and for pretty good reason. This is Intel, not only because of the year that the stock has had, but another changing of the guard.
You're right. Over the weekend, we heard news of, now former CEO, Pat Gelsinger is quoted as being a job of a lifetime. Well, I don't think investors might have been looking back over his time at the helm with such rose-colored glasses. The stock, has come off, high prices and did nothing but retreat and give back some of those earlier gains during his tenure. Let's look at the chart, bringing it up here for us. So let me put some drawings here to show us, to kind of exemplify. When the CEO took over, not long after the stock was riding high, maybe on good news, thinking about projections for the future.
Return story, right? This guy had Intel in his blood. He was going to be part of this big turnaround.
You're right, and that's anything but has happened. The stock is off, 45% from those highs. Even the stock couldn't hold on to some of those, rallies that the S&P had for 2024. And here's a little salt in the wound. The stock even bounced after the news came out. But we've got right now interim CEOs at the helm until a permanent replacement's been found. So big job ahead while they look to make a bit of a shift in their business model in terms of producing chips for competitors. So a lot of interesting things to watch for going forward.
All right, great breakdown of some of the big things out there. Thanks for that, gentlemen. If you at home have a question for our team, here's how you can get in touch with us. Just email td.activetraderlive@td.com. And for more information about the Active Trader platform, you can scan the QR code at the bottom right-hand side of your screen. You're going to be able to read up on all the great features. There's also an option to open up a practice account if you'd like to try out the platform risk-free. All right, now to the heart of the program, trading and debating. It is time this week. The stock in the spotlight is Enbridge. Before we get going on the debate, just a reminder to our viewers that the securities and strategies discussed on our show are for educational purposes only, should not be considered investment advice or buy, sell, or hold recommendations. Options trading carries high risk, may not suit all investors. Significant losses are possible, so it's important to assess your own risk tolerance. Make sure you do your own due diligence before engaging in trading. All right, let's get back to our stock of the hour. Enbridge, what made you guys pick this stock to debate here?
Well, we're going to show some Canadian love. We've been doing that previously with Shopify, so we thought Enbridge would be a good candidate as well. And there's a bit of seasonality, you know, now with the winter looming large, of course, a lot of heating, and Enbridge is a big beneficiary of that. So figured we'd peer into some of the numbers and the charts there.
Yeah, this was pretty widely held as well. It's more commonly held from an income perspective, but interesting to take a look at it from a trading perspective as well.
Yeah, headline right now, I'm looking on one of the news sites. Enbridge raises quarterly dividend by 3% as it released its financial guidance for 2025. So we got a stock that is in the news, it is on your radar. So there's what we do. We get some time on the clock. We allow for each of you to have 2.5 minutes to make your case. Then we're gonna need some time, of course, to counter. That'll be a little bit looser there. You can step all over each other. That's fine. Don't worry about that. So as always, we draw from a hat to see who's going to be who. Herein, you're going to take on the bull case for Enbridge. Give it a go. Let's get the timer going here.
All right, I'm going up first. Okay, so I'm going to be defending the bullish stance on Enbridge. So let me start by just talking a little bit about some of the big picture stories here real quick. So they deliver energy that fuels North America and beyond. And they are the longest and most complex oil and liquid transportation system that we have. So they transport about 30% of the crude oil in North America, about 20% of all natural gas that's consumed in the US as well. They are in fact the largest natural gas utility company now in North America, recently because they did an acquisition of 3 US utilities, Dominion Energy North Carolina, and K-Star Gas. So now they have a customer base of 7 million folks under them there. So other than that, what I also want to look at, we'll talk about the moats, but just fundamentals real quick, is they have EPS growth at 15% year over year. Their price to book value ratio from a valuation standpoint, they're actually below their 10-year median, which stands about 3.15, and they're at 1.8 right now. And even from just net profit margin, they've increased currently they're 12.9%, and their usual average is about 9.83% there. Now, what I want to do is actually, let's go into the charts, see what the price action's doing here. And so let's dive in here. And I want to just note to all our viewers here first. So Enbridge has paid its dues price action-wise. You can see it's come off of this long slump that had started back in 2022 off of the highs there. But at this sort of interjection right after September, it started going into this long upward trend formation here. Now, the few other things that I'm also looking at is I've got the MACD and I've got my money flow index as well. So the MACD is we're in positive territory, we're above the zero line, and we're seeing the signal line above the moving average as well, which is another bullish indicator that we have on the stock. And then also the money flow index, which tells me about, you know, volume-wise, where is this price? Is it in that overbought or oversold level, including volume? And we're kind of right in that golden zone. It's not really it's not overbought, it's not oversold, so there's still momentum going into this. Now, let me just bring in a few different patterns over here that we can show as well. And I'll just clear some of these studies out of here. So what do we have showing up here? So we've got an inverted head and shoulders, and again, another bullish pattern. So we see this long formation happen across that 2023. This is the zone we were looking to just break through, and it did. It's actually broken through that, which is another strong pattern formation. The upside we're looking at is, you know, if we look at the measured move here, I mean, we can get up to that 50 level over here, possibly, and test those highs again.
Test those highs again, just under the bell. Jason, what case you got for us?
Well, nice job selling. I'll give you kudos to that. But well, the charts in some respect are making it a little bit easier on the bullish side. We're in an unquestioned, you know, upswing where you get price trends making higher highs and higher lows. And let's be honest, Enbridge does have some top tier assets, right? You mentioned their pipelines. You mentioned, you know, both from a crude perspective as well as natural gas. But thinking about the future, we're thinking about further development. That's where I think about long term. There's going to be strain on its business case, whether or not we're coming from community leaders or we're talking from government leaders. There's one of their major pipelines, Line 5, for example. We've even got calls from shutdowns by Indigenous as well as government officials. So expansion of their existing lines as well as their play in the oil patch. That's not going to be easy. It's going to be harder, more than easier going forward. Yes, we don't know what's going to happen with incoming regulations with the new administration, but with that being said, when we're thinking about somebody who might be providing precedence to domestic producers. It's one of those things that it worries me to think about long-term applications here. But let's take a look at the chart as well. You talked about how we potentially might be breaking out, but looking at the chart we've got on my screen here, over the last number of years, the stock has come up against a pretty firm resistance level at the $44 level. Let me go ahead and bring those up onto the screen for everybody here. I've got we can see over the last number of years, it's really bumped us ahead, and we're right at that level again. I want to pair that with an RSI that I've got up on the screen as well. RSI gives us overbought and oversold. Right now on the weekly chart that we've got here on the screen, we're actually overbought, so over that 70 level. I've got some key notes that support my argument here that in similar times when we've been up against twice before previously, when we're up against that $44 price level with an overbought RSI, we've had significant pullbacks in price. So I'll really be watching to see what's going to be coming next. And actually, if we move into something a little bit shorter term, we've got some kind of indecisive candles that are coming up on the recent trading days. So if we go ahead and bring that up on the screen, threes that really kind of jump out to me. We've got a really indecisive doji candle that's popping up, happening early last week. A couple days later, we had a pretty substantial bearish engulfing candle, showing that the previous day's upward trend has been completely engulfed by the handle. And lastly, yesterday's candle, we have continuing in that uptrend. We've got the inverted hammer showing us at the top of our lane. So that 44 level may hold steady for us.
You guys so drew me into your arguments that I actually wasn't watching the counter. I'm both hey, he's running out of time. He's running out of time. You have completely captivated me. Now you've heard each other's arguments too. Get a chance to mess it up a little. We're gonna have a little counter time here. We'll let Hiran jump off, but Jay, don't be shy. When you get in there if you got to get in there.
All right, I'm going to start with the charts again, Jay. So I think, it's no denying. Maybe there's a short-term formation happening where there's a little bit of a bearish signal coming through. But overall, if you're looking at a long-term, 3 months, 4 months out, this is definitely on a belter right now. It's going up and charging towards that. And you say 44, I don't know. I see that 47.50 zone where we're seeing it, especially with the breakout on the patterns there. The other thing I'll talk about, you mentioned about the Line 5, so regulatory affairs, they had the Keystone Pipeline as well, notably. One thing to understand about Enbridge is it's a very diversified business. So it transports crude, it transports natural gas, but it's also in renewable energy as well. So they've got diversity in terms of the revenue streams that are coming in. But the other thing is, if you are, and this is part and parcel of the business, the regulatory things and red tape that you got to cross through, and only an established firm can be able to do this. And they've kind of made headways with that Line 5 issue there. The other thing, Greg, you kind of brought it up, was the dividends. They're a dividend aristocrat now. 28 consecutive raises on their dividend, which makes them an aristocrat. And I know there's an argument sometimes about questions about the payout ratio. Is the payout ratio too high?
You read my mind. The payout ratio is coming up.
What's going to happen with the payout ratio? Is it sustainable? Let me give you some stats here. So 28 years of consistent raises on dividends, all right? The payout ratio at one point, 10-year median average was 196. On the 5-year, it was 175. It's 129 now, 116 on the discounted ratio.
Yeah, that
So
payout ratio
just opened himself wide.
Right.
It was like he just opened his shirt and said, Jay,
come at me, bro, is what he said. But no, that payout ratio of 129% is well above kind of the oil and gas industry. So I was reading analyst reports, prior to today's session. They termed it dangerously high. So it's one of those things is that going to be sustainable? You talked a little bit around moats, and sure, yes, admittedly, Enbridge has top-tier assets, but renewables, as you were calling attention to, that's one of the more shallower moats that are out there from a business perspective. So it's not all sunshines and rainbows. And then going back to the dividend, it's one of those things that psychology of the masses takes over in the market. That what if those dividends become questioned? Even if they stop raising their dividends, you've got all these long-term investors that are holding on. What if they're not getting price appreciation? If they're no longer getting dividend increases as well, are there going to be some flight to then cause some additional downward pressure on the stock price over a longer period of time as well?
Yeah, I don't know about that. I'm gonna go against that, because I think with the dividend history that they've had so far, and you have to understand this business, it's predicated on the fact that they have very genuine, reliable streams of income coming in and very predictable. A lot of their contracts are long-term lease contracts that they have, and they have they call it escalators on their pricing. So every year the prices raise. So they can only if you have a confidence that you have this revenue stream coming, will you go and exceed your payout ratio and still be able to satisfy the investors there and keep them as shareholders.
Bum, bum, bum. All right, we have had the debates, we have had the countering. Now we're going to explain how you would trade this if you take the bull side, if you take the bear side. So we won't time you on this. We want to get into this, right? How would you trade the bullish side of Enbridge through options?
All right, so I'll go first. So just looking at the chart and just looking at target prices over here, one thing I've identified is there's potentially we're looking at that. I think it can get to that 45 to 50 zone just based on the measured move that we have over here. So there's a bit of upside that we have. Average analyst price target is is sitting at about on the U.S. dollar side about sitting at 50 on average. So based on that, I'm going to look at some options here. And so when I bring up the option chain, one thing I'll notice is just, first looking at the IV, just to give me a sense of kind of where the premiums are in terms of their life usually, whether they're cheap or expensive. And relatively with this current percentile, it's kind of like in that sweet, median zone right now. Looking at just the near term, they've got earnings coming up in the next quarter, should be in the next, month or so. So I'm looking at the January cycle right now, and just based on the sort of premiums that are showing up here, just going for a straight long call in my strategy here. So I'm going to target the 45, which is just pretty much just out of the money at the moment here. It's bidding 65 cents. So my break even on that is just 45 plus 65. So if it gets up to that level, that will give us our break even. And if it crosses beyond that, we'll start making some profits over there. So that's kind of what I'm eyeing there.
You can play it from that angle. How about you, the bear, Jason?
All right, so timing's everything, right? Whether or not we're thinking about going a little bit longer with your call perspective, like we're going to allow some price action to take place, maybe take a little bit break from that time decay. Well, on the sell side, what I'm thinking about is being able to get in, get out. I want to try and manage my risk over a shorter period of time so that I'm not going to allow something to kind of get away from me. If we jump back into the option chain that we've got here for Enbridge, one of the things is that there's admittedly there's not a lot of strike prices and there's not as many expirations. So we've got to be pretty specific with what we're trying to do. I was trying to draw. We've done in the past, debits and credit spreads and things like that, and that was my initial thought here. But I try to go things a little differently, show different options for traders to play this. I was thinking that we could actually go with something that's not traditionally bearish, but it does allow me to play both sides to double up my income. But it's one of the trades that we're going to want to make sure we manage, because if it does start to move against us in either direction, we do want to make sure that we can limit our risk on either side. And that strategy is trying to play a straddle at 42 and a half. I'm going to pick the nearest time frame, which we can see on the platform is just 17 days out. So I've only got a couple weeks to kind of play it through. So if we draw that up on the screen, I've got it at the bottom right now. It's bringing in $1.70 credit. So that tells me I'm taking in $1.70 across 5 contracts. I need to watch for break evens on both sides of the trade. I've got that up in the Analyze tab as well, so we can visualize the trade. So I'm making peak gain the closest I can have the stock stay at 42 and a half. So ideally it's going to come down where it's at now, but because I've played both sides, but I've got room for the stock to move, but keeping in mind that I've got unlimited risk to the top side and substantial risk to the downside. This is definitely not going to be a set it and forget it type of strategy, but it's one that allows me to kind of play on my downside, but also take some premium on that on both sides of the ledger as well.
Very interesting stuff and important caveats there too. Thanks for laying out the bull and bear case for Enbridge. Just a reminder to our viewers that this debate was for educational purposes, does not reflect our personal opinions about the stock. Now, before we move on, Jason, you're going to show us how to customize a chart here in the platform.
You got it. So we've been trying to show off lots of shiny tools that we can use. So let's take a bit of a step back so we can walk through just how one can make some customizations to the platform. So let's jump in and let's take a look. So I've got my multi-chart set up here. I'm going to pull up Shop. That's the stock that was in the crossfires last week, so we can see how things were going from our last conversation. But first quick thing I'd like to show everybody is how we can customize some time frames and aggregation periods. Time frames, you'll notice, are at the bottom. Your most commonly used ones, your 1 day, your 1 week, et cetera, is all going to be listed down there towards the bottom. But if you wanted to kind of make some additional customizations, you can hit this plus button and then choose to add different ones down there. So maybe we're going to go with a let's say one day we'll make this out to maybe 7 years, just for the sake of TV here. So if we go ahead and hit save, you'll notice that custom time frame and aggregation is now, or aggregation, not aggravation. Yeah,
That's what
shows how I'm
there.
feeling this morning.
Aggravation.
But then, okay, so that's how we can adjust our time frames. Up at the top of the screen, you also have your frequencies. So you've got many different ones to choose from, the most popular ones there. But much like many things here on the platform, it's not a one-size-fits-all. You can go ahead and hit custom in there. So maybe we wanted to add in, let's say, a 10-minute candle and have it look and get that added into our list. So every time I go back to the chart, it's going to be there for me. The last thing I'll leave everybody with is how we can add a study to the chart. That's going to be through the study settings, this function button towards the top. Over 100 different indicators that are going to be available here, many to choose from. If you're learning about one, you can go ahead and hover over the question mark. That'll allow you to learn exactly what that study is trying to tell you. And let's go ahead and add in, one of my favorites, average true range. It shows us the average that the stock moves on a given day over a period of time. I can go ahead and either scroll through the list or type in the name, drag it over. Once it's added in, you can go ahead and hit close. Look to see that it's been added towards the bottom of my chart. We can also save those studies using the indicator button at the top of the page. You'll notice that I've got a number of different study sets saved previously, so you don't need to recreate the wheel. You're able to kind of move between studies, so you're not missing the forest through the trees.
All right, great stuff. If there's a stock that you at home want to see our debaters go head-to-head on, you can send your suggestion to td.activetraderlive@td.com. And for more information about the Active Trader platform, including information about more complex trading ideas and theories, you can scan the QR code on the bottom right-hand side of your screen. You're going to find some great resources once it takes you there in the Learn tab. Enhance your trading skills and amplify your knowledge. All right, we are a couple weeks away from the holidays, but we're not quite there yet. We got a few more shows under our belt for 2024, and of course, there's always something on the horizon. Before we want to wrap up, we want to do On the Radar. What are you looking at for the rest of the week?
Couple things. I'm going to circle back to the one from last week, which is Lululemon. They have that earnings coming on Thursday, so remember those breeze-through leggings?
Breeze-through leggings.
Let's see what updates they give us on that. But other than that, also one this week is also, again, in this space, Ulta Beauty. So Ulta Beauty, is a company, retail that sells cosmetic products, and usually it's been you can consider as recession-proof. But what's notable about them is they are unique because they allow the customers to sample their products without asking for help. Like you can just go and sample everything there. But also recently, if I just pull up the chart, you'll notice that back in August, I've labeled it the Buffett effect. So Warren Buffett or Berkshire Hathaway.
I know that guy.
Yeah, you know that guy. So he took up a sizable stake after doing a lot of trimming throughout the year in Ulta Beauty. And so maybe, and this alludes to maybe something that's a concept around this in the cosmetic world. Estee Lauder's founder had formed it. It's called a lipstick indicator. It essentially suggests that consumers will buy more affordable luxury items like lipstick during economic downturns when money is tight. So I don't know if that bodes anything.
Treat yourself.
You got to treat yourself, yeah. The
That's
little
something
things.
the three of us know.
Yeah, exactly. So that's what I got, and then of course non-farm payrolls are coming up this week, so that'll give us a number on the wage numbers from the previous month there.
What are you watching out for there, Jay?
Well, you got the ball rolling off the top of the show with BNS, right? So they're one of the big five banks here in Canada. So we'll be watching to see how this week plays out. The big five banks control 90% of the loans and deposits in the country, so a lot's riding on what's to be said over the next week. One of the key things that I want to be looking over the next weeks and months is all the mortgage renewals. A lot of people renewed at lower rates during pre-pandemic or even early in the pandemic. We've got $315 billion of mortgages coming up. So with that pressure as well as interest rate pressures, we know we've got rate decisions coming up. Those mortgage payment sticker shocks might be coming around. I've got a chart just up on the screen here as well, showing a comparison of the banks. But about those, when people get those mortgage assessments back, be curious to see when those payments are higher. Will there be more shopping around than there has been in the past? But just taking a look at some of the, I'll just throw a highlight on the screen here, just a little bit of the over the last year. We can see that CIBC and Royal Bank seem to be outperforming the other quintet, if you will. Is that the right term?
Quintet,
quintet.
yeah.
We know our shapes around here too, so that's a good thing. So that's what I'll be taking a look at.
All right, we're almost at the end of the show. When we meet next week, I believe the stock up for debate will be Coca-Cola. Quick thoughts on, I mean, it's pretty ubiquitous, right? Everyone knows Coke.
Everyone knows it. Yeah, it's synonymous with the season, and you always remember those commercials that they come out during Christmas.
Apparently,
The polar bears are.
Polar bears,
bears drinking, apparently.
Yeah. So so there's a little bit of that nostalgia there, and then of course it's my favorite between the two. So.
Oh, can you do the test? If you just you didn't know what was going on at all, you would know which is Pepsi and which is
I took
Coke.
the Pepsi challenge and I chose Coke, so I'm on that same train with you there too. So.
All right, we'll have a good one next week, guys. Always a pleasure. Always a shame when the show comes to an end. It's got to end at some point, and we'll see you next week.
All right.
That's our show for this week. As always, investors should perform their own due diligence before trading. Thanks for watching.